If you've had Netflix since July of 2014, Netflix has gone up over 890%. Facebook, in the same time frame since July 2014, 4 years, is up over 650%. So they're part of the FANGs. Facebook, Apple, Amazon, Netflix, and Google, which are driving the marketplace. Most of the stock gains are compressed into these 5 stocks. Those 5 stocks account for a huge amount of the gains in the stock market because they've driven up crazily. And of course, ETFs and hedge funds and mutual funds, sovereign wealth funds have all jumped on the bandwagon and driven these prices up to the sky. Now, we talked about last week Netflix. Netflix didn't make their numbers, and they didn't miss by much, but they were punished. They were down 15% in overnight trading, and just billions of dollars worth of value were taken out of the company. Now, they recovered quite a bit the next day, but I'm going to tell you that that's how trigger happy a lot of investors are, and you need to pay attention to that. Now, we've been talking about the fact that there's some insider selling. Mark Zuckerberg has been selling Facebook stock all year, hugely. You know, he's been selling a little bit. These guys get a lot of their wealth from their stock. But this year, he's had enormous 10, 15 times what he's had in the past years. And just yesterday, Facebook came out and said they weren't going to make their numbers, and they were punished hugely. They dropped over 25% in overnight trading. 25% in one day. Now, they've recovered a little bit. I think they're still down 17, 18% the following day. But these are tells for you. This is a late stage phenomenon that happens. You get compression into the stock markets because fewer and fewer stocks are driving the indexes, and you have everyone crowding into these crowded trades. So I'm telling you that when you start looking at the FANG stocks, now we don't have the FANG stocks anymore. We only have the ANG stocks. We've got Apple, and we have Amazon, and Google. I guess we got the double AGs because Netflix and Facebook have been taken out to the shed and just beaten about the head and shoulders. So if you have that, you really need to pay attention. Now, I understand if you've owned these stocks, you've done exceptionally well. There becomes a time when you start thinking it might be prudent to take some of my profits, and this may very well be one of those times. So oftentimes I see when I sit down with clients that they've had a very, very good run in something, they run it up and then they run it down. Don't let that happen to you. Take some money off the table. Let's move it into a different asset class. Let's get into some real wealth. You remember, a stock is only a claim on real wealth. Let's get into some real wealth, and let's get into something that's cash flowing, that's going to cash flow for a really, really long time. So my very best for you. Bye-bye now.